Hello, in this video, we're focusing on the practical concepts that you can actually apply in the real business world. Hope you enjoy it. Let's get on with it. Today, we're looking ahead at how energy trading will evolve for those who own solar panels and battery systems. As solar technology becomes more common on rooftops and buildings, it opens up new possibilities for managing and sharing the energy that's generated. With batteries storing excess power, owners have more control over when and how they use or sell electricity. This shift creates exciting opportunities for individuals and communities to participate actively in the energy market, making the system more efficient and sustainable. Let's explore what the future holds in this space. For a long time, energy consumers have simply bought electricity, paid their bills, and hoped prices didn't rise too much. But that's changing now. Many homes and businesses with solar panels and batteries are shifting from just using energy to actively producing it, storing it, and soon trading it. Instead of sending extra power back to the grid at low rates, this energy can now be treated as a valuable resource. Owners can sell it, trade it, or use it in smart ways based on real-time data. This means the energy market won't be controlled just by big utilities anymore. Instead, it will include many individual owners who understand exactly when to save energy, when to sell it, and when to adjust their usage to get the best value. The shift we're seeing now is less about if solar and battery owners will join energy markets. It's a given that they will. The key question is how much value these owners will actually capture from their assets. Many have the potential to earn significant returns, but that outcome depends on their ability to navigate the complexities of the market or to work with others who can do it for them. Without effective support or tools, much of the potential value could go unrealized. So, the focus isn't just participation, but maximizing the benefits and determining who will help secure those benefits on behalf of the owners. Energy trading is evolving because of three major shifts in how energy is produced and consumed. First, distributed energy resources like solar panels, home batteries, electric vehicles, and smart inverters are changing the landscape. While each device on its own seems small, together they can produce or store as much power as large traditional power plants. This decentralization means energy is generated and managed far more locally. Second, energy prices are becoming more volatile. When renewable energy production is high, prices can drop very low, even going negative. But during peak times or grid stress, prices can spike dramatically. This volatility opens up new opportunities for those who can adjust their energy use or supply quickly in response to real-time market signals. Together, these changes are transforming energy markets worldwide and creating new dynamics for energy trading. Smart meters and real-time pricing are transforming how electricity is bought and sold by making it a dynamic, data-driven process rather than a fixed contract. Advances in AI forecasting help predict energy supply and demand more accurately, while automated trading platforms enable quick and efficient transactions. This means solar owners don't just passively export excess energy, they actively decide when and how to trade it, optimizing value by responding to market signals in real time. These changes are reshaping energy trading, turning it into a continuous flow of informed decisions rather than a simple buy and sell arrangement. Energy trading for solar and battery owners goes beyond just net metering or feed-in tariffs. It means using your energy assets more strategically by storing energy when prices are low and selling it when prices are high, which is called time shifting. You can also reduce your costs by shaving peak energy use and taking advantage of price differences throughout the day. Beyond this, there are opportunities to provide services that help stabilize the grid, such as frequency response and reserve capacity, adding flexibility to the system. Peer-to-peer energy sales allow you to trade directly with neighbors or other users, and participation in virtual power plants brings many distributed energy resources together to operate as a single, coordinated entity. Altogether, this shifts the focus for owners from just generating energy to managing and optimizing a diverse energy portfolio to maximize value. For commercial and industrial operators, Energy trading has evolved into more than just a sustainability initiative. It has become a genuine tool for improving profit margins. Batteries can generate additional income by storing energy and selling it when prices peak, even during times when the main business operations are inactive. This approach not only helps increase revenue, but also reduces costs by avoiding expensive peak prices and making the most of the system's flexibility. Essentially, it's about turning energy storage into a smart asset that supports both financial performance and operational efficiency. Managing risk through hedging helps businesses protect themselves from the unpredictable swings in wholesale energy markets. Many traditional operations like warehouses, data centers, farms, and retail sites are now evolving into hybrid businesses by combining their physical operations with energy trading activities. This shift creates new revenue streams and operational efficiencies. For residential owners, the benefits go beyond just reducing energy bills. They gain resilience against outages and can generate extra income, especially as electric vehicles begin to function like mobile batteries, storing and supplying energy dynamically. This practical approach to energy use and trading is rapidly reshaping how value is realized across different sectors. Energy trading starts with accurate forecasting of several factors like solar generation, local energy demand, current market prices, and any grid constraints. Using AI-driven forecasts, batteries can make smart decisions about when to charge, hold, or discharge energy to maximize value. Because managing this process manually isn't practical, most owners rely on automation through aggregators, virtual power plant operators, or AI-based energy platforms. These systems act automatically and can respond to changing price signals within seconds, ensuring optimal trading and balancing without the need for constant human intervention. This approach enables efficient and scalable energy trading, turning complex market data into actionable decisions in real time. Many energy markets require a minimum size for bids, which can make it tough for individual small battery owners to participate directly. Aggregators solve this by combining thousands of small batteries into what we call virtual power plants. This pooling unlocks access to wholesale and ancillary service markets that would otherwise be out of reach. When it comes to settlement, revenue generated from these markets is shared among several parties: the asset owners who provide the batteries, the platforms or aggregators managing the aggregation, and the grid operators or other market participants. Trans processes for how revenue is divided is essential. It builds trust and encourages ongoing collaboration across the whole system. Australia stands out as a global leader in household battery adoption. Here, virtual power plants aggregate these home batteries to help stabilize the grid, respond to frequency deviations, and sell energy during peak price events. This approach provides households with ongoing payments that go beyond traditional feed-in tariffs, making energy trading more rewarding. Meanwhile, in Germany, commercial businesses leverage batteries and flexible loads to engage in intraday electricity trading, often multiple times a day. This strategy allows them to capture value from the volatility caused by excess wind and solar power. Both examples highlight how different markets use energy trading to unlock new revenue streams and enhance grid stability through the smart use of battery storage and flexibility. In states like California and Texas, solar plus storage systems are playing an active role in the energy market by participating in demand response programs, emergency capacity markets, and real-time wholesale trading. This means these systems can help balance supply and demand by reducing or shifting their energy use when needed, provide backup power when the grid is stressed, and even buy and sell energy in the market throughout the day. Importantly, these assets can generate revenue not only when they export energy, but also by offering their capacity and flexibility as services to the grid. This expands the opportunities for energy storage beyond just storing and selling electricity, turning them into valuable market participants that help improve grid reliability and create new income streams for operators. Peer-to-peer energy trading lets neighbors or entire communities buy and sell energy directly to each other, bypassing traditional utilities. This creates opportunities for local price discovery, meaning energy prices can better reflect the real supply and demand in the area. It also helps reduce losses that happen when energy travels long distances across the grid, improving overall efficiency. Plus, communities gain more energy independence by generating and sharing their own power, making them less reliant on large centralized suppliers. This approach supports the growing trend of decentralization and could be a step towards more resilient, locally controlled energy systems. One of the main challenges faced by peer-to-peer energy trading is obtaining regulatory approval, which can vary widely by region and often slows down implementation. The settlement process is another hurdle, as accurately measuring and reconciling transactions between multiple small players can get complex. Additionally, liquidity is limited because not enough participants are involved yet to create a robust, continuous market. Because of these factors, peer-to-peer trading tends to work best in controlled environments like managed microgrids or newly developed communities where the system is easier to manage, rather than trying to replace wholesale energy markets entirely at this stage. This new energy trading model allows us to use assets more efficiently, getting more value from solar panels and batteries by increasing their active use. It also speeds up the payback period on these investments, making them financially attractive much sooner. By supporting grid stability and encouraging flexibility in how energy is stored and used, this model helps balance supply and demand more effectively. It promotes decentralized energy ownership, empowering individuals and communities to take control of their energy production and consumption. For many owners, the income earned from trading energy can be the key factor that transforms a battery from just a nice addition into a solid investment that pays off over time. While the opportunities in new energy trading are promising, it's important to recognize the real risks involved. Accessing the market can be complex, with layers of regulations that aren't always clear or stable, which creates uncertainty. Revenue can fluctuate, making income streams unpredictable. Many systems rely heavily on technology, so any failure or lag can cause issues. Cybersecurity is another concern since digital platforms may be vulnerable to attacks. Additionally, asset owners often face unequal bargaining power when dealing with aggregators or platforms. This imbalance, combined with poor contract terms or unclear revenue models, can shift much of the value away from the actual asset owners and toward the platforms managing the trading. It's crucial to understand these challenges alongside the benefits to make informed decisions. Businesses should approach energy storage with flexibility in mind, sizing batteries not only as backup systems, but also to take advantage of trading opportunities in the market. It's important to choose partners carefully, making sure they offer transparency, clear exit options, and clarify who owns the data generated. Energy assets should be integrated into financial planning, just like other financial instruments, considering their value beyond traditional infrastructure roles. Rather than fearing regulation, companies should prepare for it, as most emerging policies are designed to support flexible markets and encourage participation. Finally, thinking in terms of a portfolio rather than individual assets will help capitalize on energy trading benefits, since larger scale, diversity, and aggregation typically lead to better returns and more stable revenue streams. Energy trading is evolving in significant ways, shifting from traditional utilities towards dynamic platforms that enable more flexibility and real-time interaction. Instead of relying on centralized power plants, energy systems are moving towards distributed portfolios, meaning energy production is spread across many locations, often smaller and closer to users. This change also impacts pricing, moving away from fixed tariffs to dynamic markets where prices can fluctuate based on supply and demand conditions. Importantly, solar and battery owners are no longer just consumers, but active participants in these complex energy ecosystems, trading energy in real time and contributing to grid stability. This transition opens up new economic opportunities and changes how energy is managed and valued across the system. The future of energy trading for solar and battery owners goes beyond being just a small-scale experiment. It's becoming the backbone of a decentralized and digital energy economy. Success will come to those who grasp the importance of flexibility, automation, and actively participating in energy markets, rather than simply selling excess power at fixed rates. Winning doesn't mean having the largest battery or the cheapest panels. It means treating energy as both a physical and financial resource. As we look forward, the smartest owners won't focus on how much energy they generate, but on the strategic decisions about when to sell their energy and who to sell it to, maximizing value in a dynamic market environment. If you found this video useful, there's plenty of more business and finance videos on the channel that you'll enjoy watching and get great practical value from. In the meantime, thanks for watching.